podcast with Juan Colón. Juan is a co-founder and CEO at Darwinex since 13 years. That's a lot of time, Juan, in London. So he's decentralizing and open sourcing hedge funds via his company. It's quite an interesting segment. BookWriteGPT.com is presenting this podcast. If you want to write a book in 1 minute with AI, with your LinkedIn post, you can do that on BookWriteGPT.com. The first credit is on me. Juan, welcome to the pod. Tell me a bit more about yourself and what you're up to nowadays.
Well, thanks very much for having me. Real pleasure to be here with you today. And I just watched the previous podcast. It was amazing. I could see Shimes, who was so energized. I felt like levitating after listening to her. That was great.
She's great.
Yeah. So about me, I'm basically an entrepreneur by accident. Married a Spanish diplomat that forced me on the topic of having to become your own entrepreneur 12 years ago. My brother is the more interesting character in this story. He's an independent trader. So one of the many millions of people who have joined the markets since the internet allows them to do so. Again, the curve is steepening because now at first you couldn't do anything from home, then you had a monitor, and now you've got AI, and then soon you'll have like quantum computers at home, which basically really levels the playing field for everyone involved. And then what we realized is that all those guys are playing the wrong game. And let me explain why. It's quite simple. It's if you manage peanuts, the most you can make is peanuts. So there's an entire industry built on what I call death time value, which is this retail brokerage industry, which works as follows. Is basically you go out and you spend something like $1,000 to $1,500 to get somebody to approach the market for the first time. You incentivize them in the most toxic way you can, which is like get rich quick, buy a Lamborghini tomorrow, blah, 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 blah. And then that poor fella is going to lose, 5,000 euros or something. And that death time value is then going to finance the next death. And that's kind of a doomsday scenario, which isn't great, where people are basically trying to gamble peanuts and losing peanuts, but then those peanuts add up. I think it's just a big number. And meanwhile, what happens is there's this stigma. And as you know, I think social change always tracks technological change. And right now you tell somebody you're a retail trader, and it sounds like you're some sort of inferior moronic creature who can't play the game like the big guys who are sat with the banks and just, and what we're doing now, so what Darwinex does is offer anybody that comes through the door the option for 38 euros per month to expose their strategy to our investors and get paid a 15% success fee.
I see a product market fit there. I think it's a great idea. I think it's a huge problem. So are you trading yourself still nowadays?
I've never traded. This is my brother who did it, but we've now got 10,000 people in the platform who are doing it on our simulator.
And was your brother successful? And if so, to what degree?
Yeah, so he was, and not at first, because this is a process. He lost some money on my behalf.
Yep.
But then over time he persevered, and what triggered this whole thing, and I think we can stay with that ladder, was the fact that he kind of was ready to go for the next step, because he built it like 3-year track record, which he wanted to market. And he had neither the skill nor the appetite, quite frankly, to then go and raise capital from outside investors. Not to mention the fact that getting a license, I mean, to raise a hedge fund costs something like 200,000 euros in Europe to get going, and it costs you sort of 100,000 euros out of pocket per year in lawyers, compliance, and also that. And that's before you've even started selling. Okay,
right.
So that's when he learned how that worked. And then I think if you can stay there on that thing just there. So what we do is we basically take. No, I think at the bottom. So what we do is the way it works is Charles is a trader, comes to the platform, and we're going to kind of assetize him. Those 3 letters that you see there at the bottom, so this THA, JTL, that's basically THA. To give you an example, was the world's best player of World of Warcraft for a while, between the age of 13 and I think 18 or something like that.
Yeah.
And then at some point he sort of figured out, okay, the market's a more lucrative game than World of Warcraft. He started trading. He's now got a 10-year track record. and he's managing 25 million euros through our platform. Has made €1 million. Okay,
He wasn't better than me though. My Beast Mastery Hunter would whip his ass.
You should check Sonny. I mean, that was his alter.
What did he play?
World of Warcraft.
Yeah, but what class? What?
I mean, I never played World of Warcraft. That's what I'm being.
I'm watching World of Warcraft right now. I grew
Okay.
up. I was the best in my server as well. I'm pretty sure I would whip him, whatever class he was like back then. But I played like 10 to 15 years ago or something like that. And yeah.
Okay, I'm gonna get the profile and send it out to you. So because
Yeah.
I mean, he is the guy is. I mean, he is seriously good as a hedge fund manager. And
But probably right, because the gamers they really develop like laser focus and hyper gamification. So I would bet on them too.
Yeah, I mean there's a lot of parallels, and it basically shows again how social change tracks technological change. Like these people who have a high IQ and they're doing well at the gaming. I mean, and that's another discussion I have. I think the market is a massive online game because everybody is betting against everyone else, and that basically the price is the result of those bets. So really, the market's a game.
Right.
It's a challenge of skill where everybody is kind of placing their bets, and the ones that do well, obviously make money.
Right.
And
it's so crowded, right? Like how can I develop an A1 trading strategy? Can I just use ChatGPT deep research with a bunch of other algos and develop something really interesting and winning? I could have an edge against these big ass hedge funds with like 15 top geniuses and so forth.
Yeah. Okay. So here's the thing: is that it's obviously super hard to beat those guys, but then the beauty in that is you don't have to. And here's why: because those guys are managing billions. So when you're managing billions, your opportunity cost is you have to have a strategy that makes hundreds of millions per year.
Yeah.
And you're playing that league, which is super hard because you're basically up against the MIT PhDs and so on and so forth. But then you've got a big advantage, which you sat at home in India someplace.
Yep.
And then all you want to make is 100K per year from the market. And then there are inefficiencies at that scale in the long tail where you can find your own niche and make money out of that. Obviously, those would not scale to billions, because the more the capacity of the strategy, the harder the competition you're up against. But you don't need to, because the thing is, if you've removed all the overheads and you can do this for $38 a month, then you're playing a much easier game than they do.
Right. And what's the odds of me being successful? Let's say I have a decent bread. By the way, I would never get into this because I have like more profitable channels, starting startups and with everything that I'm doing nowadays. But is it like 99% people winning vs like one genius winning?
So, I mean, it's called Darwinex because it's survival of the fittest. And then like natural evolution, everybody gets a shot because most people can afford $38 and only the fittest make it. And then obviously it's, I mean, the markets have kind of been a winner takes all, because the better you are, the more capital you've got, the better your way to play it. So, and it's highly leveraged in that way. So yes, I mean, I think to give you an idea, one of the things we've just started is the independent trader experiment, which is an index that tracks the top 100 guys, the top 1% guys in our strategy, in our platform. And that's kind of the top 1%. So at any given point in time, only the top 1% would be in part of the allocation. So that's roughly the numbers, yeah.
And if I'm an investor, let's say that I invest in $1,000 in 10 of them, what would be my returns? Let's say that I'm a smart investor and I use deep research to scrape the shit out of them and see if they have potential. Okay, so scrape as in what they do, or everything? I'd scrape their passport number if I need to. Okay, so what there's one thing that sets us apart is like these stickers you've seen are basically encrypted wrappers that let you see what the underlying assets is worth, but you don't see the underlying assets. That's the first thing. So you can't really replicate the thing without paying them the success fee. But what you make, you can. I've just entered that link in there. It's public. We're running the experiment as a separate newsletter, and the compound growth rate for the last 5 years has been 17%.
per year.
17% returns.
17. But the important thing is I haven't mentioned the most important thing, which is that's kind of comparable to the S&P 500. It's basically we manage the risk in a way such that it has the same volatility as the S&P 500.
But that's pretty good. I mean, if I want to diversify myself, it's pretty stable. It's pretty low risk. But are you saying like how much investment should I make, or is it like a rolling fund type in which you invest in 10 to hundreds of them for me?
Okay, so I mean, this one is buy and hold, as in we do it for you, leveraging the toolkit that we built for the Darwin Exchange, so that you could do two things. You could have your AI bots take our API and look at the real-time quotes of all the different players in the thing, and you could make your own selection. And that's what we've done. So leveraging that toolkit, which is open source, what we do is we are allocating to using our algorithms to the ones that we think are best. But that's kind of, we're one of many users in the platform. So if you're a passive investor and you want to diversify, I would recommend like endowments too. Something like this is liquid alpha, and I think it's quite uncorrelated to other asset classes. So I think 5 to 10% of your portfolio you should always park in something which is liquid alpha, and this is what we would advise. And the beauty in this is that you can invest in this from 10,000 euros with instant liquidity. You don't have to go into 3-month lockups or park like millions, which is only available to institutional investors.
How do you get your investors? How do you get your traders on? Do you do outreach? You do publicity? Is it mostly organic?
It's mostly organic because again, social change. What's happened over the last kind of 15 years is that people have lost trust in their financial advisors, and what they trust is their closest circle.
Or an AI.
Or an AI. I'm increasing also on AI, right? But in this case, the way we've grown has been organically in the sense that the people who participate in our trader challenges are the financial experts of their circle. And it's basically, they'll basically say, look, check out this thing. There's independent guys making money. That's better than the bank because you can access them directly.
Right. Financial advisors like realtors and even insurance brokers are sort of 80% salesmen, 20% technical, right?
Well, that's the thing. I mean, I think there's all sorts of legacy infrastructure that requires middlemen, and the minute you've got more than 2 middlemen, then you've got this conflict of interest whereby they're basically thinking of themselves as opposed to the client. And then when it comes to hedge funds, you've basically got the manager, the employer of the manager, the sales guy, institutional guy, the retail guys. There's like 5 mouths feeding of the food of the alpha producer and the alpha seeker, and what we do is basically disrupt that and take the whole thing out of the way.
What's a profile of your investors, like 60 years old plus?
No, it's typically
10 million.
No. I mean, I think this is typically basically the same profile as our most experienced traders, which is people like in the late 20s all the way up to the mid 40s. Yeah. So people who start having some monies and they're looking for alternative opportunities. The average ticket size would be something like 30,000 euros. That's kind of distorted because, like anything in life, you've got this Pareto distribution where a lot of the assets comes from sort of 10 to 15% of the large whales. But that's what it is, yeah. Mm-hmm.
So people that have traded, they've got tired of that. They don't want to invest much time. They're sort of retiring in Spain in a nice villa. And then they're like, yeah, I know the space. I know how to judge a good thesis from a bad one. Let me invest in that young gun that is
it's not even that. So it's basically like, the young gun, like the 25-year-old has learned about the platform. He's in love with it, and he'll tell his dad, and his dad will say, okay, I'm just going to test 10K. And if it goes well, I'll up it up to 100K. And then he'll tell his golf buddies, just like, look at what this cool thing I found. So it's basically organic. We don't do any advertising because our business model doesn't allow for advertising.
Right. And the young gun himself, I think I knew one guy from Montreal back then that has got deep into trading. And I think he's making most of his money selling trading course, not even trading nowadays. So is trading still a thing for young guns? Wouldn't they get into AI or SaaS at a young age if they want to be entrepreneurs?
Well, I mean, we've mentioned trading. I mean, I think most of our guys are algorithmic traders, right? This is not like your classic guy clicking buttons. This is a guy who's using AI.
Studied that. They studied that at school.
This is like more and more data scientists, right?
Got it.
So like what they're doing is, they take it's kind of TensorFlow and this and that. Those are the kind of words. Astrophysicists or they do encryption algorithms for telecoms at day, and then they do the other thing at night. That's the other thing. If you don't have the overheads, you can basically have like a day salary on your one thing, and you've got your passion, you turn it into a side salary. It's just like the democratization, I guess, of finance. Yeah.
And let's say that I'm a smart astrophysicist right out of school. Someone injects 30K in me. How much of that 30K would I invest from day one, and how much could I make in day 30, 60, and 120?
Yeah. Okay, so you've become a hedge fund manager. So the way it works is like, for argument's sake, to do round numbers, he gets 1 million euros. And on the risk-adjusted level that everybody is performing here, which is roughly the S&P 500, I think the best guys post 15, 20% compound performance. So the numbers are, okay, I've got 1 million euros under management. I post 20% performance. I get 15% on that. So 20% times 50 is 3% on 1 million. That's 30K. So I'm making 30K per million of AUM.
Every year I'm making 30K, and then someone invests more into me, and then that becomes 60K, 90K.
And of course,
what are like big success stories on your website? Has someone got into like a $100 million fund?
No, not yet. Like the top guy we've got right now is 25 million.
It's pretty good. So he's making like a couple of 6 figures per year.
Yeah, but then we took like approaching seven digits. So like,
so he's making 7 digits a year.
On a good year, we do the numbers again. So 25 million plus times say 25% because it's a good year times 15%. That's 4% on 25 million. That's 1 million euros.
Should he retire at that point? Hire humans or just have AIs run the show?
No, they build teams. I mean, he's got a methodology. I mean, what the guy does is he trades news. He's built a database of behavior of markets after monetary policy releases, and he's got that method, so he can basically apply AI. Part of it is just like the what's it called, analyzing language of what the central banks do versus what the price does, and they're looking at anomalies.
Social sentiment, sort of.
Well, but that's also something we do, but because we're just looking at the trader level, but we can talk about something else. But yeah, social sentiment is basically the words of what the kind of Powell has said during the monetary policy release versus what the price has been doing. And they look at, okay, normally when they say this should happen, but the market is doing that. Therefore, I'm going to take advantage of the market not getting it quickly enough.
I would just trade against these vibe traders, these GameStop idiots, like I would find a market where there's most of them, like low IQ people trading stuff, and I would just wreck most of them.
Well, unfortunately, we can't offer, I mean, there's limitations to our model. And then because we don't really have the infrastructure to control what people are doing, because we offer this, it's an open source hedge fund. We can't kind of facilitate market abuse and stuff like that. So when it comes like to really low liquidity stocks, pump and dump stocks, then people could really kind of corner the market and move the price one way or the other. And then at some point that would land us in regulatory trouble. So we stay clear of that.
Right. Or trade against crypto rug pullers. Do you have crypto on your platform or not?
We're in process of getting crypto. Unfortunately, this is one of the social change and regulatory change tracks, that stuff. Like we own 2 regulated entities in the UK and Spain, and this is regulators have crypto has been operating in a vacuum where you could go out and see crypto advertising for Binance on a bus, and we weren't allowed to do that because the regulators wouldn't take it. So basically
in Europe or what?
In Europe, yeah. So in Europe, you can go out to a bus station and anybody can be advertising crypto without any license. But if you have a regulated broker, then you're banned from offering crypto.
Smart.
That's smart,
like these regulations, man.
This is
fucked
amazing.
In the head.
Yeah.
You're making like 50K a month with that, right? Like MRR?
Us?
Yeah.
No, it's 400K because it's 10,000 guys paying 38 euros a month.
Oh, okay. Yeah, I did the math wrong here. So what's the next step with that? Are you seeking funding yourself? Like what are your top goals this year?
No, so what we're doing right now is basically preparing our entire model for esports in a way such that trader communities, like communities, I mean, there's Brawl Stars, there's League of Legends, there's esports ecosystems built around that. So what we want to be is the esports for hedge funds and collaborate with content producers who are interested in the long-term well-being of, I mean, mind you, many of these GameStop idiots have been led into believing that this can be done because some people are making money off the back of that. So we want to put a stop to that in the sense of saying, look, we're going to offer everybody a chance, that's Darwinex, and see who's the best at the esports. And at the other end, of course, it's a highly levered model in the sense that the more capital is, the bigger the incentive for the smartest guys to join, and the more smart guys join, the better returns we get, and that sort of creates a flywheel which offers everybody an opportunity. Because again, the problem was that the guys with peanuts can't play the real game, and what we've done here is opening the game so that everybody can play it.
Yeah, and just disclosure on the GameStop people, like I don't have nothing against them. It's good that they want to get into entrepreneurship and all of that. I just believe, why fund something with no value? I mean, GameStop, such a useless video game store. Most of them sit down empty. You're just investing in legacy shit that doesn't scale, So
no, I mean, I totally get that. I mean, I think that, there's two things that are infinite, right? One is the universe, and the second one is human stupidity. So unfortunately, there's no limit to that. But the thing is, right now, the way the game works is that allegedly 100% of independents who play the market are idiots, and that's not the case. I mean, I think that we are the place for the 1 or 2% to go. They will self-select into coming with us, and what we do is we level the playing field so they can play like the real guys, right?
Right. And how could we improve that market? Have you seen LTSE, like long-term stock exchange by Eric Ries, like something smarter, more rational, less volatile than the current stock market?
So, I mean, the current stock market, we could argue like that's kind of the subject of like 2 or 3 podcasts in itself. But I think a stock market is a natural monopoly in the sense that, and it's a public good in the sense that if all supply and all demand kind of comes to a single marketplace, then everybody gets the tightest possible spreads. What's happened is, of course, the problem is if it's just a monopoly, then they have no incentive to just improve the technology and so on, which is why regulators at some point kind of split them up. And what that's led to is that there's plenty of arbitrage opportunities where the likes of Citadel and so on are making a killing by taking a tiny slice of spread. Everybody takes a transaction. And I think what there is attempts to break that by creating fairer rules, which give the small guy the same opportunities as the big guy. But unfortunately, you're fighting these flywheels, which are very, very hard to turn around.
And you believe it's fair, it's rational? Because I believe there's a bunch of bloated companies out there, right, that have tons of fundings, but like almost zero value, and should leave place to up-and-comers. It's also quite hard to get your company listed on the stock market, right? So what do you think about these things?
Yeah, well, I mean, this thing is just coincides with fake news. I mean, what's happening is there's just this explosion of stuff happening left, right, and center with humans, and now also like increasingly AI and so on, that I think we just need to converge on some sort of new paradigm. Unfortunately, I'm just not smart enough to figure out what that is. In the meantime, though, what I believe is, I think there's plenty of opportunities, right? Because Warren Buffett once said, like, one thing is you look at the value of something and you see the price that it's trading for, and then if it's moving a lot, then it could be shooting ducks in a barrel, right? So if you're smart and you make the most of the tools that empower you to research and come up with a fair estimation of value, and you see these kind of people just doing stupid stuff, then you just buy it when it's low and short it when it's high. Yeah.
And Warren's playbook is so long term. He did very, very deep research, probably even better than ChatGPT does nowadays, even before that was a thing, right? But he's the kind of guy who still prints his emails. So I think he has his genius.
I mean, I think ChatGPT is great, but the results you get out of it are only as good as the questions you ask it, right? So the fact that it's giving everybody better answers doesn't change the fact that in the end, it's a question of how good the questions are that you're prompting. So I think it empowers the smartest guy even more than he already is, but it doesn't level that playing field, in my opinion.
Yeah, you ask a bunch of LLMs to prompt the deep research prompt, right? And you ask an AI to merge them after that, and usually that's a good start for research, right? I think these tools are quite fascinating. I'm pretty sure we're already feeling the effects of them in the market. Juan, where can people find out more about you and your company?
Oh, well, they can go to darwinex.com, the Darwin Exchange, and then we would be very happy to speak to them.